people are going to join us as we go along, but I said 2 o'clock and it's 2 o'clock. So first of all, I made changes to my Quickstart files, and most of you probably know that by now. I've posted a link to the video on, well, I put it on Skype and I put it on HGSI, and I doubt if that notification's gone out yet, and it'll go out tomorrow morning. Plus, it's on YouTube. But even with the Quick Start files, they were getting pretty sloppy. So I tried to integrate. Thanks, Carrie. Yeah, I'm a little hoarse, but I'll be fine. I tried to integrate into folders that made more sense as subfolders. So under stock prospecting, you'll remember I just had a list here, but I want to, or I wanted to, and I did organize these into recognizable names. We're going to talk about this today: impulse reaction, or IR scans. Stocks and groups moving up, smart groups. I'm sure you saw the quote from Gil. Paul Reiki pointed out to me, he receives tweets from Gil, and I passed it on to George, and George put it by Gil's image on the website, and then he sent Gil a note, and Gil wrote back to George, and he said, yeah, it's true. He said, I've been doing this for 28 years, and these stocks and groups moving up, smart groups, and these are just combo-driven groups that I put together, I don't know, it's been quite a while now. They just drive the stocks to the top of the list, and arbitrarily, HGSI takes the top 100 stocks. This is, I need to get out of the top 50 group inclusion report and go to all securities. This group of stocks, and I pointed this out in the video if you haven't seen it yet, there's 100 in here, and there's 100 in here. Now there is, these are duplicated in the end of day and the intraday, and what's nice about this, on the intraday, you can come in here and immediately see which stocks are following through the next day out of the stocks and groups moving up, both of these groups. And I don't know if, I don't have it loaded. I was going to look, let's just do this. It looks like 68 of the stocks in this group are moving up today. And let's take a look at this one here. In the 5 to or 0 to 1 to $15, 56 are moving up. So if Gil uses this as his primary prospecting source, and it sounds like he does, you know, you can just prospect in here and find some really good candidates. So I just want to make it easier for everybody. Otherwise, you have to go to the designer and locate the smart group, and new people coming to HGSI, they don't even know what a smart group is, much less how to find it. So just did that to make it easier for me and for everybody else. Then these are the volume point of control scans that have been in there. And these are the VPA individual screens that I dragged up from the basic end of day. I moved them out of there because I think these are very useful scans. And with the intraday, the bullish test for supply, you can see which ones follow through. So I know that Vertex Pharmaceutical had a test for supply yesterday, a low volume test, and it just happens to be up $14 or 14.92% today, but you would have had to buy a pretty strong gap here on this one. But you know, it worked for people that bought the open. Here's another one. This is a Vital Therapies. 2 days of low volume tests. There were two VPA flags on this one, and right here, and there's also what we call the IR method. When you see these green bars, that just means the stock is pulling back from the high. Okay, so these are very useful scans. And then scorecard intraday, leaders up on volume and trending stocks. And I'm not going to spend any time on those today. That's for another time. Essentially, that's what I've done. And then I just added this chart. Let me go to the IR, and we'll start talking about IR here. This chart, which puts the green and the rose lines in here. When the conditions are met on this one, for example, this stock was up, but it pulled back from its high right here. So the buy point on this little $3 stock was right there today. So a buy stop would have gotten you into that. Lots of, they don't all work out, but you wouldn't have bought that because the high was never taken out here. And I'll get into that more as we go along. Okay, let's see how many people we have now. 29, so they're coming in. I'm going to try something here. Let's see if this works. I'm going to put this in your chat window. And okay, yeah, there are several links here. If you haven't watched the video yet, and it'll be linked several places. The video, well, let me bring this into the screen. The video is linked here. Add-on, this is where you find the add-on for the the modified files. Here is a link to the IR method, a shortcut. This is a PDF. And here is a position sizing spreadsheet, which I'm going to be talking to. This is, it's a portion of the spreadsheets that I handed out at the webinar, and I want to use it because it's the one that makes sense to me. So if you want to click on those links, you can download these, and I'll talk about them as we go along, okay? Well, I'll talk about this one and this one. Okay? First of all, I want to give credit to the guy that gave me the ideas for the IR method. He calls it impulse reaction, I believe, also. But his name is Frank Bunn, and I discovered him on Udemy, which is an online service for people that want to learn remotely and learn on their own. And they're having a sale right now, but they have sales all the time. If you want to really get into depth on more on the way he works, and I'll explain the differences between his method and what I'm doing with HGSI, I suggest you buy the Stock Trading Ninja course. It's on sale for $11 today, and I don't see his other course in here right now, which is unfortunate. Let me do another search for Frank Bunn, but it's udemy.com. He's got several courses. I of course have all of them, and I've been through most of them. But the two that really pertain to this method are Stock Trading Ninja. Elite Trend Trader is the other one. Now, the reason I recommend these two is because he teaches this methodology, and he also has two very nice ebooks that go along with these courses. None of the other courses have ebooks. They're video only. And the ebooks are nice to have for reference. So if you want to spend a few bucks, those are the two I recommend. Once again, Elite Trend Trader and Stock Trading Ninja. I know that many of you already have these books. I've mentioned them before, but I just wanted to make sure that I give him credit. He's been trading a long time. I think those ebooks are very interesting reads. He talks about his evolution as a trader, and that's how he came to this risk-based method of trading. Okay, so let me show you what I'm doing with HGSI and talk about the differences. He doesn't use volume in his trading, for one thing. His triggers are the MACD. I'm not crazy about the MACD, but it's an indicator. It's been around a long time. But instead of using the MACD, I decided to use the VPOC 1010 as a trigger for an uptrend or a downtrend. So this particular scan right here, and this is intraday, it's under the impulse reaction folder. It's number one. It's 1010 positive, down from the swing high, impulse reaction, and the fan has to be in an uptrend. So by the fan, I mean the moving averages, and he explains all of this in his book. I just use the same moving averages that he uses because he's been using them for years, and they work for him. So here's our one stock that some of us really dislike. Yeah, because every time I've traded it, I think I've lost money on it. But anyway, it fits the criteria, and it's up 1.95% today. Let's just take a look at it. And you can see that it fits the criteria because the VPOC 1010 turned green. Yeah, it's a nice setup on it this time. Let's take a longer look at this. You can see how choppy this stock has been. I mean, it was beautiful here. I don't know if, on second thought, if I've lost money every time or not, but enough times to frustrate me. But now this is a nice setup, and this is the advantage we have with HGSI rather than just using his MACD crossovers. We have the VPOC, so we're bringing volume into play. We have VPA, which is showing support. We also have the group line, which he pays no attention to the groups. So we have things going for us that he doesn't. By the way, let's do a quick diversion here. And I'm going to rebuild the groups quickly so we have up-to-date group lines. Paul, you better get your order in for OCLR. Okay, and I'm going to bring that chart back up, and you can see, it's hard for you to see probably, but that group line, well, here, has turned up today. So we are seeing, like I said, the VPOC, this green bar was generated because it was down from the prior day's high. Now, this was an expansion, and really it's been in contraction for a long time now, but it's contracted as the group is contracted. Now, without that group, the insight to the group, we're kind of blind, and that's why I think the group is important. What we do see in this stock is we see support for the past 4 days at least, and it looks like a nice setup. This is what I don't like about OCLR. Look at the earnings that just really dropped off on a percentage basis, and that may have been that gap right there, but it looks like there's some accumulation going on right now. So let's go through a few of these stocks. I'm just going to stick with the intraday views, but for nighttime prospecting or early morning prospecting, these are the same views right here, except you're going to have totally different fields. Now, by using the intraday views, we have the ability to see which of these stocks are following through. And there's a lot of stocks here. There's 218 stocks that are in a fan uptrend. Doesn't matter. You mean the group line, Maryland, that doesn't matter. That group line is a private, there's no scaling on it. Does that make sense to you? It's just a private line. There's no way to scale it in the chart. So all I care is about the direction. So this is an awful lot of stocks. What I suggest you do, but this is up to you. You're going to get a cast a wider net here, of course, but you may want to stick to groups like the top 50 or the top 50 group inclusion report. When I say the top 50, it's that group that's created every day. Or you may want to stick to the NDX or the S&P 500. Or you may have a private list of stocks that you screen all the time. But this is a wide net, as I said. But if I drop down to the next one, and let me, that's the end of day. Let me close this up before I get too confused here. Okay. If I drop down to the next one, look at the number here. We have 218 stocks that meet the criteria of a fan, and this one there is no fan required. So this also lets stocks in which do not have a fan requirement. And if you look over at this column, EMA fan uptrend over here on the right, if it says no, these are not in a fan. Now what this allows you to do is to find stocks that, well, that's a bad example, isn't it? You can discard that one. You can find stocks here that are down from the prior day's high, but may be a bottom fish. I know some people like to bottom fish and are turning up. Now, if you have these in combination with a VPA flag, and in this instance, where the group is starting to move up, and this is home builders, I think KB Homes shot up big today or yesterday, one of the 2 days. It shows that this group is starting to move up, and maybe you can catch some of these stocks after a green bar like this. This has been a short, and now suddenly it's turning into what could possibly be a long. I'm hesitant to say that because look at the moving averages above it. Here's the 200, the 100, the 50, and the 18, and there is just a ton of overhead resistance over here. but I decided to put these in because I didn't want to limit you to just stocks that had the fan going up. But look what happens. It opens that up to 567 securities. Your best bet, in my opinion, is to stick with stocks that are trending with the fan. And you wait for the pullback. This is the way, this is actually the way to do it, because you're looking for stocks that are trending. This is a way where you can possibly find some bottom fish that are turning up. Let's look at Pioneer Energy Services. Now this is a stock. All of these conditions over here on the left, or these three conditions, would have been excellent trades using this method, because beginning right here, the fan was in place. You can see the 100 barely went above the 200. Let me make this full screen. This is even a better trade down here. No, I'm sorry, that wouldn't work. This chart reveals, every green bar reveals where the stock closed down from the previous high. It has nothing to do with the fan. You have to look for where the fan is in place visually, and then you know that this met all of the criteria with the current screen that I'm using. But that would have been a great trade. That would have been a great trade. This is a little pullback and then a buy there. Here, this one never would have executed, even though the bar turned green, because theoretically it has to take out the high from the prior day. This would have been a bad trade here, because no, it would not have been. It didn't take out that high by a couple of cents, so you wouldn't have been in that one either. Yeah, the fan was intact this whole time though. Now this is rose because the VPOC is red down here rather than green. Theoretically, the way I'm doing this, the VPOC has to be positive, because we want positive volume going into these trades. Now here is the latest trade right here, or the latest signal. You can see that it's down from the prior day's high, and it's just really at the buy point right now, and this is a little $6 stock. The VPOC's in place. We had a pocket pivot the other day. But what I don't like is, this is the updated group line. You can see that this group is actually going down today. Still, it meets the criteria. So, what you're looking for? You're looking for a stock that is moving in an uptrend. Well, here was the expansion on the stock back here. You want it to congest. The fan is in place, which means the 18 is above the 50, which is above the 100, which is above the 200-day exponential moving averages. Ideally, the group will be going up also. In this instance, we had pocket pivots after this, so you want to go expansion to contraction to expansion again, and the buy point would actually have been right here on this stock had you seen this or screened for this on the day. Once again, this is rose because the VPOC is negative on these charts. Let's see if I can find, let's see what groups are in here. Oh boy. Technology's been out of favor lately. Let me go to a tech stock here. Bottom line tech. And I'm going to just change to the industry group, payment and data processor. Let me go back. Okay. I'm doing this on the fly, as you can tell. Okay, boy, this was an excellent stock for this procedure. Now you can see how tight it was down here. The fan was in place. These green bars were generated. It went from green to rose, and then it went from to green again, and then the following day here it shot up, and it really hasn't looked back from that point. Now the buy point was right there. Had anybody put a buy stop, and what I usually do is I put a buy limit order in, and if it gaps up, then I either wait for it to come down and fill in that window, and you would have gotten filled on that, or you have to make the decision to take that off and just go with a market order to get in. But anybody who did that, this would have been a great trade. This would have been a very nerve-wracking day here, though. I mean, that range is ridiculous. The open's 43.98, the high's 49.31, and the close is 42.81. So there were probably a lot of people shaking out of that position on that day. And then the next day there was another one, and you're certainly not going to wait for this to be your buy point. You have to make a decision on something like this if you want in. It would have been tough to take after that wide range day, though. But still, there were several opportunities after that. On this one right here, you're going from expansion to contraction. You're looking for a setup. Your buy point on this one right here would have been the prior day, and this would have been an excellent trade also. Now getting to the current days, you can see several VPA flags here. After this shakeout day, there was a reversal day yesterday, and theoretically the buy point would be above this wick on this candle. An early buy would have been in here, but really if you hold off for the buy point, you're still not in this stock. But when you see a stock like this, why not just put it in a watch list and see what happens with it going forward. Now let me narrow my list down here. I'm going to go into my user groups, non-index groups. And I want to point something out to you. If you're an Insider Club member, I keep these files updated. And the top 50 group inclusion reports, top 50 GIR swing high pullback, these are all stocks where I apply this view to it, and I have a history of these stocks. So let's just look at a few of these stocks over the past few days. You can see Facebook was in it on the 22nd. Well, here, I need to redo this. I want to take the filter off. These are the stocks that were in it on the 22nd. It looks like they're all down today. The 25th, these are the stocks that were in it. This has been a, what's the date here, the 25th. Look at this stock though, and look at all of the opportunities to trade this method. You're going from expansion to a 2-day contraction, an opportunity to get in, a little expansion, another opportunity to get in, a several-day expansion here, another opportunity, and so on down the list. Now this stock's had a tremendous run, a gap up here with a wide range day and a spinning top. It's probably probably had most of its run. So, when they get this far along, you have to be extremely careful. But it doesn't mean that it's not going to base sideways and go again. I just wanted to point out to you that if you look at these files, the history, that's what I'm doing with these stocks. I'm just taking the stocks from the top 50 group inclusion report every day and putting them in a folder for you. So these are the ones that were in today from the top 50. And you can see that actually they're doing pretty well as a group. You look at the intraday range though, most of them are well off of their high. But let's just run through these very quickly. Okay, this was down. You can see the fan was really challenged right here. But there was a green bar here. Here's the prior day's high. There's your buy point, and there's several points in this stock. ConocoPhillips. Here was a green bar right here. Now you would have had to put up with a gap here to buy this, but it would have been a successful trade for a few dollars. Here's the bar from yesterday. So an expensive stock, if you want to wait for that high to be taken out, theoretically you want that to be taken out. But it's always a judgment call. If you don't want to wait that far, sometimes when I take these, I'll take them if it takes out the prior day's high. And WEX. Okay, so the buy point is, well, it's right at it right now. It's not doing much. These are expensive stocks, as you can see. Now here's Etsy. I thought Etsy was setting up nicely today because of this process. You can see up here, here's a green bar. None of these trades executed. And when they don't execute, you just follow them down. You take the low from the prior day, and you really don't want to see more than two lower lows below that. But as always, it's a judgment call. There's no perfect setup. I really thought Etsy was, I believe that's how you pronounce it, was setting up nicely, and it still may go. This is its current price now. If this was the buy point right here, you'd be behind on the trade right now. But, it can always develop into a good trade. Trade Desk is another one I was considering. There's your buy point from the prior day right here. So you'd be in that trade too. The problem is the market is not really following through. Well, let's see what it is doing. I'm looking at my other computer. Well, it's not really doing much. Okay, and Netflix. Let's take a look at Netflix as an example. Okay. You can see several opportunities here, several buy points. Right there you'd been in. Your stop is, I haven't even talked about the stops at this point. Your stops, you should not have hit your stops on this had you taken the trade. Here's a good trade right here. Let me turn my updating off. It's starting to bother me now. Okay, so here's a recent one here. So we had 3 times a green bar because this This high was lower than that high, and this high was lower than that high, and obviously this one was too. So if you were waiting for the buy point on this, it would have been above, a couple cents above that right there, which, you know, that's a pretty wide range. You just have to use your own judgment on some of these calls. And the early buy is the high from the previous day. But that would have been a good trade. Now, here we got, analysts are coming out and raising the target price on Netflix at this point. A lot of people got into it, and I actually had a spread on and took it off. I made a few bucks. I was ahead a lot more than a few, but when the market started sinking, I just pulled it off because I knew what my stop point was. Even with a spread, I based my stop upon a price level. And there's when things start going against you, there's no need to stick in a position. You can always get back in. And here we're just chopping around. But it was in here yesterday. To the safer buy point. By this I mean you want to see the stock have some momentum. Anybody who chased the open on Netflix today is well behind today. That's why the suggestion is that off of this low pivot here, you wait for the prior day candle's high to be taken out. If you're more aggressive, you take the high of the previous day, and in that case, it would have you in a losing position today. And your stop would be down below the low, yesterday's low. Now let's talk about this spreadsheet. And Marilyn, I didn't use your spreadsheet. Thank you for posting it. I just wanted to stick with my spreadsheet. What I did is it's a modified version of my spreadsheet. When you download it, it is a read-only file, which means that before you enter anything into it, you should save a copy and give it a different name. And then once you save it, then you can work with it. But if you happen to overwrite any of the formulas, just download the link again. Now these are a couple of stocks from the 27th that I used as an example. The whole theory behind this is risk control. If you don't control your risk, you're in big trouble. Because as we've all done, we take a trade and say, oh, it's going to come back, and every time I do that, I lose a bunch of money. So I don't do that anymore. So let's take a look at MSI. This is from a signal on the 27th, which was 2 days ago. So here's the green bar right here. The buy point, theoretically, but I used I believe I used let's see, which high did I use? 116.03. Okay, I used the more aggressive buy on here. You can tell that because look down here at 116.03. So rather than waiting for this one, which was a safer buy, this one right here, I used the more aggressive buy, which was the high from this candle here. And the reason I did that, my thinking was, okay, this is a low pivot point. If it takes out the high of that day, it's probably a relatively safe trade. So, using those numbers, 116.03 I put in for the high. The low I used 114.93, and it gave me these numbers with a capital number of 50,000. Now, I know a lot of you trade much bigger numbers than that, but this spreadsheet is really for people who don't want to risk, or these numbers, this capital amount is for people that don't want to risk a lot of money, or they're just getting started, and they need to, they want to play, is what I'm saying. So what I did here is I used the numbers, as I said, 116.03 for the high, and what it does is this spreadsheet calculates your buy points and your risk, and by taking that more aggressive number, I was only risking 1% on this trade, and by risking 1%, I could buy, this number will fill in automatically when you put in the high and the low. You could buy 215 shares of this stock, and your targets are down here, and your risk, your initial risk is $250 here. I can't buy 215.52 shares, so I rounded it at 215, and you can see that my risk, rather than 250, is 249.40. A big deal. But by having a 1% risk, you don't have to go very far to get your rewards. Only up to 117.21 to reach 1R. To get to 2R, you only have to go to 118.37. So where did it get today before it pulled back? So at the high point, it got to 117.84. So that would have attained a reward of 117.21. Now, the rule, what you're trying to do is you're trying to get, 2.5 to 3 reward for every risk that you take. So with the stop in place, and your stop is 114.89, so the buy is right here, your stop is now 114.89, right about there, 114.87. I'm very close right here. So you're in a trade now. You only have a 1% risk if you get stopped out, and this stock only needs to go to 119.53 to get your 3 reward for the risk of $249.40 plus slippage, of course. So the less you're risking on the trade, as far as a percent of risk, the easier it is to retain your rewards. Okay, I hope that makes sense to you. It'll make more sense to you as you go along, and if you play with the spreadsheet. Now let's look at a short trade that came up using this methodology, and that is SLCA. I don't know what it's done. Whoops. Since. But right here was the trade, and your entry point, your aggressive entry point, would have been the low of that day, and your safer entry point would have been clear down here, which is probably crazy if you're waiting for that wick to be filled. But you would have been filled on it on this day here, but you're giving up a lot of profits. But this short, you're risking 3.23%. You can buy or you can short 284 shares, or you could round it off, of course. But that gives you, you're risking $250 or $249.92. And then if you attain these levels to the downside, this is the, I should have changed this to Well, you know what it stands for. This is the money you're going to make if it gets to those levels. I should have changed that to reward, but anyway, it doesn't matter. It all makes sense mathematically, and that's what counts. So you're risking 3.23%, and your stop on this is 28.12. And what number did I take on this? I probably used the more aggressive number. I did this 2 days ago, and I don't remember what I did 2 days ago. So let's see. The 2724 is the number I used. So I used the aggressive number here also. I wouldn't have waited, for this to fill down here if I were shorting it, which I wasn't, by the way. I'm just using this as an example. So what do we have here? We have a stock that's essentially in free fall, that's had multiple negative pocket pivots, except there's one day up. The VPOC turned negative. It's been negative. The group has been going down. So it's got everything going for you to the downside. So you can use a spreadsheet for position sizing, and I want you to play with it. This is similar to the one I handed out at the webinars, except I also had ATR stops uh, in addition to the price-based stops. If you want to change your capital amount to 100,000, it changes these numbers automatically on the shares you can buy or sell. Now, if you're like Jeffrey, did I get enough zeros in here? And you want to risk $5,000 per trade, you can just change this to $1,000,000, and you could buy 4,300 shares rather than what 200 before. So it depends on the amount of money you have and the amount of money you're willing to risk. But the point is, you're always keeping your risk under control. You know what you're willing to lose before you get into a trade. I use a spreadsheet all the time. I think most of the people that follow any of the things that I'm doing do the same thing. I know Paul Reike and Marilyn, they use, Marilyn's got her own version, but I think she uses this too. Paul uses it religiously, as do most people on this board. I know Tom does too, and uh, a lot of people. So I don't want to spend any more time on that, but I did give it to you. And if you look up above, look at the links, that's available to you. Now let's look at this PDF. There are a lot of subtleties. There's a lot more to go into. I just don't have time to cover everything doing this for an hour. But here, this is a guide for you. This is a stripped down. I didn't delete that, did I? Stripped down version of what I had at the last webinar, and this is plenty sufficient. This is the impulse reaction process. Use a spreadsheet for position size and maximum risk. There are three types of risk. Setup risk, that is what you use the spreadsheet for. You want to know how much the dollar amount that you're willing to risk, and if it's $200, fine, or whatever, or you can, if you have a lot of capital, you just know where you stand is the most important part. Then there's intrinsic risk, stock setups where the stop out risk is less likely, support areas, VPA tests, and so on. This is why I really like to concentrate on tight charts. I think this methodology works so much better when you stick to charts that where there's a lot of activity and there is a nice flow to the chart. And we'll go back and look at some more charts. In fact, I'll show you some examples. Excuse me. Let me get a drink here. Sorry about that. And there is also contextual risk, strength of trends, group direction, market direction, resistance. I've been talking about the groups and the trends. The trends are determined by moving averages, and you can also use trend lines. I think you'll find that in a lot of instances these prices bounce off of the 18-day exponential, especially, but they can also bounce off of the 50 and so on. But VPA flags, this is a real advantage for us for using HGSI. Well, here I talk about the trends. A micro trend is a 3 above the 6, short term 3 and 6 above the 18, 18 above the 50 is an intermediate, and long term 50 is above the 100 and the 100's above the 200. And the fan, of course, is all three of them are in order. These are, you can read this on your own. I don't want to go over each one of these, but this is a process you can follow to try this out. You can certainly paper trade if you want to, or you can risk less money than you normally would. Just cut your capital amount down on the spreadsheet. Now let me get into the top 50 for today. Let's see what's going on there. Nike. Wow, that happened pre-market though. They had a big earnings beat today. And this was not a in the list. This was actually in a downtrend until today, and the shorts got caught on that one, I guess, because Mike, why do you want me to run an update? Oh, for the recent prices. Okay, I will. Thanks. I forgot that I took it off. Have any of you had trouble with crashes on the automatic updating? I have now experimented with 6 computers, and I cannot get, I don't ever have a problem. None of them. George, you're having a problem? Well, you're one of the few people I know. Yeah, it works beautifully for most people. Okay, George, does it crash all the time? So it's only sporadic? It's a thinkorswim issue. It's not an HGSI issue. Okay, anyway, here's an update right here. Let's see. Let me apply the filter. Okay, these are the ones from today, which meant the criteria. No, it's not a hard. I don't know. Steve, I wish I knew what it was, but it's something that's going on with thinkorswim, and it's not HGSI. You submitted to a tech at thinkorswim, George? Okay. Well, if you get any results, let me know. Anyway, these are the ones where this appeared today. Let's just take a quick look at these. Now here's stamps. This was a high flyer not long ago, and look at all these entry points using this method. But look what happens when the group rolls over. You're going to get killed, and that's exactly what happened here. Okay, I'm going to pause this video a sec. Okay, so here's the signal here, and stamps.com. The group started moving back up. You can see that group has a tremendous influence on these. Here's trade desk. Now, trade desk actually held up very well during the group sell-off, but it really didn't make any progress either. So here is, here's the safe buy point. They're about the same thing as the aggressive buy point, which was yesterday's high. It's moving up. Volume is really inconsequential. Well, we're comparing it to these volume spikes over here, though. Okay, I'm zooming in, and now you can see the volume is still not good today, because here's the 50-day moving average, and volume's been falling off for several days. So not a lot of follow through on these. This is one of those stocks which has actually been quite good recently with this method, and this is another stock. You can see the fan in place. Here's your volume point of control. Here is an excellent buy point right here. It moved up sharply, and this stock defied its group, which is biotech, healthcare. Oh, wow. Big earnings increase. And it is setting up again. So looking at this, the natural buy point, or the I call it a safer buy point, not always the case, would be right here on this one. So this one should go into a watch list. It has outperformed the group, but you have to remember the biotech group is a huge, huge group, and there's a lot of cross currents in that group, because they obviously don't all move together. So keep that in mind when you're looking at the biotechs, and just look at the stock. But this is I would consider this a tight chart. It's not a real tight chart. It's more of a neutral to tight, but these are the kind of stocks that I prefer. Now let me bring up my list, and let's just look at some of these stocks before I wrap this up. Here's a stock that has been an excellent example until we started having the problems with the market. And here's a gap up. Here's your first green bar. The natural buy point, or should I say safer, would be right here. And look at all the opportunities there were to get in to this stock using this method. Now here, this stock conforms perfectly to the group, and when the group rolled over, what happened? AMD backed off. Okay, that's one example I wanted to show you. ALGN, Align, another great example. All of these are potential buy points using this method. And as the group rolled over, the stock pulled back. Okay. CRM, not as tight, more of a neutral type stock. It had mixed signals here, but during this run right here, when the group was going up, there were several opportunities to get in, and then when the group rolled over, uh, VPOC turned negative pivot points, and that was the end of the run. Now these are potential short trades if these lows are taken out, but this one rallied today, but you can see that it closed well off of its high. But during the initial run here, I'm going the wrong direction here. There were multiple opportunities. You have to be a detective with this process. I think we already looked at Argin. No, Repligen. We didn't look at this one. Now this is a tight chart. This went from a neutral chart to a very, very tight chart. Ian loved tight charts. You have to love tight charts because a lot of the risk comes out. Now, risk comes out of it. Now here's a shakeout with a trailing stop. You would have been shaken out of this, and what I've done recently is I paid a lot more attention. I generally pull my stops during the day and make a determination going into the market close if I want to stay in a position or not. And that works better because on a day like this, if you had a tight stop, you'd be out of position, and then it went higher. Now this one followed the group. Even when the group turned down, it went further. In fact, this trend is still intact because it's above the 18-period exponential moving average. Tried to go today. Now we have a doji, not a precise doji, but a spinning top, indecision, and but this trend is still intact. If this group biotech again turns up, but once again, it's a biotech group, which can drive you crazy. Potential trade here. You'd actually be in this trade if you'd have taken this signal today. It looked really good early on, but you kind of ended up where you started with this trade today, anyway. Let's see how USAT did. Here's a stock that'll drive you crazy. Here it went from expansion, nice run here, to contraction. Probably wouldn't have taken that trade. This one would have been a gap up. I was in this stock for several days. I got frustrated with it and closed it. I actually made some money on it, not very much. And you can see why, because it didn't go anywhere. But this one, it was moving up nicely with the group here. It got up here. It looked like it was going to continue to go, and it hasn't gone. But yesterday, there was an effort to rise, and also a strength seen returning. It looked good today, gapped open, but if you chase the gap, you're behind on this stock. I'm just showing you a variety of examples. This is a pretty tight stock, and then it became a neutral stock over here, and it's still in the neutral category or classification. Let's see what else I have. John, you're on, aren't you? This is a tight stock. Been tight for a long time. Multiple opportunities to get into this stock based upon this methodology. It looked good today, early. It's still got some negative VPA flags here. It doesn't mean you necessarily sell it. Volume was extremely light today, as you can see. But this is a great example to the long side of a stock with multiple entry points and with the group moving in favor. I haven't mentioned the 13-day force index here, but it stayed green all of this time. And the VPOC positive all the way through here. Just a 1-day dip, which you just have to discount because it didn't go anywhere. I mean, it just slipped below slightly. And it's the trade still looks good. John, you're still in this trade. I know you are. Okay, let me. And I wouldn't worry about it too much, but don't give up a bunch of your profits either if it goes down. It still looks really strong to me. And we already looked at Netflix, so I think I'm going to wind this up. Unless you have some questions, I really think if you're interested in this method. Some of you may not have been here at the start of the day. Go to Udemy, and these are on sale. Their sale supposedly comes off today. It seems like they have a sale every weekend. And purchase the course Stock Trading Ninja. His methodology is slightly different. Like I said at the beginning, he uses the MACD crossover. It doesn't use volume in his, but if you're going to get one course, get the Stock Trading Ninja for $10.99. If you're going to get two, get Elite Trend Trader. This was his first course, and both of them have really well-written documentation in the form of PDF files. None of his other courses do, but when he was first getting started doing this, he created those PDF files. So nobody has any questions? If you don't, I'm going to wrap it up.